Have you ever just looked at that health insurance card in your wallet and wondered, is this thing really a safety net, or is it more like a trap? I know, it sounds totally absurd, but what if using your insurance could actually end up costing you more money? Okay, let's really dive into this, because the reality of how American healthcare is priced is, well, it's way stranger than you can possibly imagine.
I want you to just take a look at this number, $195,000. Now, that's not the price of a house, it's not a luxury car, that was a medical bill.
And here's the gut-wrenching story behind it. A grieving family got this bill for only 4 hours of hospital care right after a loved one had passed away from a heart attack. It's just an astronomical amount of money for such a tragedy. But believe it or not, the story doesn't end there.
So the family questioned the bill. And get this, they fed it to an AI chatbot, which found these massive errors. We're talking duplicate charges, improper coding, things that had inflated the cost by more than 80%. And this was the final corrected cost, $33,000. The AI found over $162,000 in errors. This wasn't just some small mistake. It's a peek into a system where the first bill you get is often complete fiction. But, billing errors are only one piece of this puzzle.
Because even when the bill is actually correct, you've got another huge hurdle, getting your insurance company to pay it. I mean, the whole promise of insurance, right, is that they'll cover you when you need them. But how often is that promise actually broken?
Well, according to data from 2024, nearly 1 in every 5 in-network claims that were submitted to Affordable Care Act health plans got denied. Just think about that for a second. You follow all the rules, you go to a doctor who's in your network, and there's still about a 20% chance your insurance company will just say no.
Now, you'd probably assume these denials are happening because, maybe the treatment wasn't medically necessary, but the data shows that's rarely the case. A staggering 77% of these denials have nothing to do with your health at all. They're because of paperwork issues, confusing plan limitations, or just bureaucratic red tape. The whole system is just drowning in administration, and it's the patients who are paying the price.
And this brings up a really critical question. When your shot at getting a claim approved can be so wildly different depending on where you are, does your health coverage basically just boil down to luck and where you happen to live?
The data pretty much says, yeah. In states like Hawaii and Alaska, the denial rates for these plans are sky high, over 25%. That's 1 in every 4 claims just denied. It really shows this huge gap in whether your insurance works like it's supposed to, all depending on your zip code.
But this is where we get to the really big secret of the U.S. healthcare system, and it just defies all logic. What if I told you that in a lot of cases, just tossing your insurance card aside and paying with cash would actually save you money? And I'm not making that up. A huge study from researchers at Johns Hopkins found this exact thing was true for 47% of what they call shoppable healthcare services. For almost half of common procedures, the cash price was lower than the median price that insurance companies negotiated.
I mean, just let that sink in for a minute. The very thing that's supposed to lower your costs is, in so many cases, actually making them higher. The study itself says it pretty bluntly. Using your insurance card can be more expensive than just writing a check.
This happens so often that we can really think of it as an insurance penalty. You're literally being penalized for having and using the coverage you pay for every single month. Let's look at some real-world examples to see what I mean.
And the difference in these numbers is just astounding. For a routine procedure like a colonoscopy, the insurance negotiated price can be around $5,000. The average cash price? $1,600. For an MRI, you're looking at $2,000 versus $500. These are not small differences we're talking about.
So to put that penalty into perspective, just look at the scale of this markup. For an MRI, using your insurance can lead to a 300% markup compared to the cash price. You are paying 4 times as much for the exact same scan just because an insurance company got involved. So the big question is, why? Why is this happening?
To understand this whole mess, we have to pull back the curtain on how hospitals and insurance companies even set their prices in the first place. It's like a game with its own set of really bizarre rules that almost always work against you, the consumer.
So, it all starts with something called the Charge Master. The easiest way to think of this is as a hospital's fantasy price list. It's an internal document with just wildly inflated prices for every single service imaginable. Then, the insurance companies come in and they negotiate a discount from these completely fictional prices. It makes it look like they're saving you a ton of money. But because that starting point is so absurdly high, the final discounted price is still often way higher than the simple cash price a hospital is perfectly happy to accept because paying with cash cuts out all that administrative headache. So, what does all this mean for you? Well, it means you have to adopt a whole new mindset. First, always question the bill, just like that family with the $195,000 charge. Second, you have to understand that cash can be king. You should always ask what the cash price is. It could be dramatically lower. And third, we have to support and demand real price transparency so we don't have to play detective and decode these secret systems just to get fair treatment.
At the end of the day, it really leaves us with a fundamental question. We all pay for health insurance to protect us from financial disaster. But when that system is so full of denials and billing errors and these insane penalties that can actually make your care more expensive, is it really giving us the safety we think it is?